This particular quarter, there are three important points which are to be noted. The first point is we have had an extremely healthy growth in sales of over 40%, which means last year we did 8,145 crores. As against that, this year in third quarter we have done over 11,400 crores. It clearly indicates the pace of execution. Many of the jobs which we acquired in the last year are now on execution mode, and that is what is reflected in this. And for the 9 months also, therefore there is a healthy growth in sales of over 22%. So we have clocked in sales of 28,618 crores versus 23,453 crores in the last year. So both 9 monthly and 6 quarterly sales numbers are fine. But you need to note that when we reported last year, the third quarter number, we had a drop in sales of 6%. Now look at this, that means in one quarter, in 1 year, there is a drop in sales of 6%. Same quarter in a subsequent year, there is an increase of 40%. And therefore, this volatility is inherent in the business, and that's how it should be looked at from a long-term perspective. Same is the case in order inflow. In this quarter, our order inflow has actually shown degrowth. We have a drop in order inflow as compared to the previous year. Almost about 23-24% drop is there in the order inflow. And for the 9-month period, there is an 8% growth. Now, both these numbers we need to look at from the guidance perspective, what we had said. We had said we will have a 25% growth in order inflow for the year as a whole and 20% growth in sales for the year as a whole. I also mentioned at the beginning of the year that large part of the orders are likely to be decided in the second half of the year. And because of various reasons, what is happening today is that substantial number of orders are going to be decided in the month of March. So it is all bunching up which is likely to happen in the month of March. Now it is also possible that some of that may get shifted or may get decided. There are two factors which are important. One is that all these orders need to get decided in the month of March as currently expected. And the second point is that it is also essential that we win many of those jobs. Then if everything happens the way in which I am explaining, that these jobs get decided in the month of March and as expected we win many of them, then I think we will still be in order as far as our guidance is concerned. But it is very important for us to understand that things can get shifted by 1 month here, 2 months here. In some of the cases, and many things don't depend necessarily on us. Some of them depend, a lot of things depend on the customer, the government, the regulations. All these factors have influence. So why is this shift to the last month? Because of the deferment, which all of us have been talking about for the last few months. That in many areas orders are getting deferred. Many ministries, we have had some issues as a result of which for almost 5-6 months. Very few contracts were decided. In the case of hydrocarbon sector also, quite a few jobs are likely to get decided in the month of March. So March is a very critical month for us, and if things work out the way in which we have planned, maybe still we may be able to achieve what we have targeted. However, there is also a possibility that things may get shifted. If that happens, we will not achieve our order inflow target. There will be a shortfall in case things get shifted to the subsequent period. By how much, it is very difficult to say, because it all depends on how many jobs are going to get actually decided on that month and how many we are going to get out of that. However, one point which we need to know is that in some sectors the medium-term outlook has started looking promising, especially in the hydrocarbon space. What we have observed in the last couple of years, the investment climate is somewhat improving now. and therefore we are hopeful of not only this quarter but in the subsequent year maybe the situation in the refineries and upstream and mid and downstream should somewhat change. The other important point which I want to mention is on margins before you ask me questions on that. We have indicated at the beginning of the year that our attempt will be to maintain margins for the year as a whole. And as of now, for the 9-month period, our margins are stable. They are at the same level at which they were in the last year. There is no change. It was around 11.4%. It is at the same level as this. However, in this particular quarter, there has been a drop in margin. Now, therefore, again, as I come to the same point that quarterly margin, sales and order inflow volatilities do not mean much to us. This drop in margin is mainly because of two important factors. One, while the execution pace has picked up and therefore the sales growth is quite good in this quarter, not all these orders are eligible for margin recognition because they haven't reached the stage at which we recognize margin. Some of them are still at the level below the margin recognition threshold. That is one. The second thing is, it is a fact that in some of our businesses, the inflation and the commodity price increases have really affected margins, especially in the electrical business group. There has been substantial increase in commodity prices. For example, if you look at the 9-month period as well as the 3-month period, over 30% increase is there in copper prices. Similarly, silver, which is also an important element for the electrical business group, there has been increase in prices, and it is a time lag between the price increases in commodities and our ability to pass on to the customer. Maybe after the lag, it gets passed on to the customer, but till that time, it has to be absorbed by it. That is one. The second important point is that there are at least about 35% of our project jobs where there is no escalation, 30% or so. There is no escalation clause. So those cost increases we have to absorb. We had considered this at the beginning of the year, and therefore we had said that margins will be maintained, and that's what is reflected in the 9-month period. So the overall picture is like this, that we will definitely achieve our sales targets for the year as a whole. If everything goes alright, the way in which we are thinking, which is unlikely, then even order inflow we may be somehow able to manage, but it all depends on the month of March. If there is a slippage, then we may not be able to achieve that order inflow target, and margins we will still be able to maintain for the year as a whole. This is the summary of the results for this particular quarter.